If you've been in Bitcoin for a while, you're not that fussed about sort of the lackluster performance, but because we're humans and we like to make these artificial delineations of time, in terms of January to November, whatever it is, then people are a bit like, oh, why isn't Bitcoin the best performing thing in, the 11 months of 2025? Why is it gold? Why is it Nvidia or whatever it is, right? And they forget that for those of us who've been in this game for a while, that Bitcoin's been the best performing asset of all time, especially given the debasement of currencies around the world. Ballot box, if you want to make money, it doesn't really matter where the money's going. It's just that it is created and Bitcoin benefits. And so I think that if the Team Red Republicans want to have any shot of winning the US midterm elections next November, forget about China, forget about trade war. It's all about printing money.
Bitcoin's true signal emerges when the noise of politics and liquidity fades, revealing it as the asset built to thrive in every wave of money creation. Arthur Hayes lays out the year's dynamics by reminding investors that perspective is everything. Those who entered Bitcoin years ago barely flinch at short-term underperformance, while newcomers obsess over arbitrary calendar boundaries. Despite gold or Nvidia stealing headlines in 2025, long-term context shows Bitcoin remains the standout asset of the modern era, particularly in a world where fiat currencies continue to be debased. The year's early turbulence from Trump's inauguration hype to the April drawdown created opportunities for those positioned with dry powder, as Bitcoin and gold both rewarded buyers who stepped in during the spring. Arthur Hayes then highlights the liquidity story that shaped the market through mid-2025. The Treasury's aggressive debt issuance after the July 4th debt ceiling raises drained liquidity rather than injecting it, tightening funding markets and weighing on Bitcoin. With the government shutdown ending and the Treasury set to resume spending, he argues that a new wave of dollar creation is about to hit the system. For crypto investors, the political motivations behind that spending are irrelevant. Only the increase in liquidity matters, because Bitcoin reliably responds to expansions in the money supply. Looking ahead, Arthur Hayes sees 2026 as a prime setup. Just as Democrats promise social programs, Republicans deliver corporate stimulus. Both routes mean money printing. Hayes frames the current moment as the window before this becomes obvious to the broader market. With uncertainty still lingering about liquidity conditions and cycle timing, he views now as the moment to deploy capital for what he expects to be a powerful Bitcoin-driven 2026. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Everything is entry-level dependent. If you've been in Bitcoin for a while, you're not that fussed about sort of the lackluster performance, but because we're humans and we like to make these artificial delineations of time, in terms of January to November, whatever it is, then people are a bit like, oh, why isn't Bitcoin the best performing thing in, the 11 months of 2025? Why is it gold? Why is it Nvidia or whatever it is, right? And they forget that for those of us who've been in this game for a while, that Bitcoin's been the best performing asset of all time, especially given the debasement of currencies around the world. But back to this year. We think about the main events of this year. The first was the inauguration of US President Trump. And I came out with a call back in January of this year, basically being like, well, where is the impulse for spending money? Where is the printed money going to come from? Trump's promising all these things. Can he actually make good on them? Obviously, the hype was massive. We had the Trump meme coin launch. And then just like we're in a simulation on January 20th, pretty much the market peaked and it was down. And the April Liberation Day was sort of the icing on the cake in terms of Bitcoin poor price performance, where we get down to like 74,000 on Bitcoin. And then those of us who had cash available were able to capitalize on sort of the Trump taco trade in terms of the trade negotiations with predominantly China and the rest of the world. And obviously, if you've been invested from April 9th until the present, you've done very, very well in Bitcoin and gold and some other things. And now if we come to the fall, I posted a chart maybe a week and a half ago, and it was my liquidity indicator, starting with the debt ceiling raising of the debt ceiling in July 4th of 2025 this year. And myself and other macro analysts pointed out that the Treasury under Buffalo Bill Besant had to raise cash to refill its coffers. And they've done so to the tune of about $1 trillion on a net basis. If you take a look at the Treasury General account, over the same time period, there wasn't really any new source of dollar liquidity being pumped into the system. And we also saw stress in the funding markets, meaning that cash is tight within the US money markets. And Bitcoin pretty much was down 5 or 6%, in line with dollar liquidity down 5 or 6% from July. And so the question now is, okay, well, the government's been shut down. The Treasury's issued way too much debt. They haven't really spent any money over the last, 40 days, however long it's lasted. And now that we expect this to end, because I guess the Senate voted, or maybe the House voted, I don't know which one, the Treasury is going to get back to doing what it does best, printing money and spending it on stuff, on goodies. Now, you might not like the goodies that they're spending the money on, but we don't care as crypto investors. As long as there's more dollars being created, our assets are going to benefit, predominantly Bitcoin. And so I think that this is the time now to start getting ready for the real show of Trump and Bessent. Now, for those of you who watch the U.S. elections in the various cities around the United States, the Democrats had a very good showing. And essentially their message was free shit and anti-Trump. And I think what people forget is that U.S. President Trump is one of the biggest free shitters out there. He did the biggest free shit giveaway, the helicopter money COVID stimulus checks, which prompted Biden to follow suit. So I know that the team red Republicans like to throw these words, socialism, and that's, a dirty word in American politics around. They're just as socialist as the Democrats. It's just that they hand the money out to big corporations and the Democrats hand it out to migrants. It doesn't matter. We don't care. Take your political ideology out of it. Express yourself at the ballot box. If you want to make money, it doesn't really matter where the money's going. It's just that it is created and Bitcoin benefits. And so I think that if the team red Republicans want to have any shot of winning the U.S. midterm elections next November, forget about China, forget about trade war. It's all about printing money and handing it out, whether that's to build weapons, to build rare earths, to supercharge AI, all the things that the Republicans like to fund. They're going to print the money to make sure that it happens, and so that their constituency feels the love going into November and shows up at the ballot box. And that's what 2026 is all about. And now we have this awesome opportunity to get in before it's crystal clear that they're going to print a lot of money. Right now, there's a little bit of uncertainty about, is there going to be enough liquidity? Are we at the top of the 4-year cycle? This is a time now to deploy capital for an amazing 2026.
Arthur Hayes explains Zcash's explosive revival by tying it to a renewed demand for real privacy in an era of advancing AI and increasing surveillance. He recalls its 2016 launch, when low circulating supply created a massive initial spike, followed by years of decline due to technical and structural issues. Today, however, the narrative has shifted. If AI can de-anonymize Bitcoin and even Monero, investors will seek protection in assets designed for true privacy. With TradFi institutions restricted from touching privacy coins, Hayes sees a grassroots push returning to crypto's original ethos, making Zcash a form of insurance against a fully traceable blockchain world and justifying his target of 10% of Bitcoin's value. He adds that Bitcoin dominance now depends heavily on Ethereum's performance. Hayes expects ETH to become the preferred public blockchain for TradFi institutions moving stablecoins, lending, and capital markets activity on-chain, supporting a $10-20K price target this cycle. DeFi projects with real revenue, like Uniswap, should also benefit. Still, he stresses that the simplest winning strategy remains owning Bitcoin. When governments create money, Bitcoin has historically outperformed most assets, sparing investors from the complexity of picking the right beneficiaries of each new fiscal wave. Let's get back to the interview.
So Zcash, I remember 2016, and I was deep enmeshed in Zcash. It was the hottest project at crypto at the time, very focused on privacy. It was a big narrative. And BitMEX was the first trading platform of any type to launch a pre-market Zcash futures contract. It really elevated our stature in the crypto markets, the price action around this thing. And when it eventually listed in 2016, I think it was December, because of how the mining rewards worked, and I know your chart only goes back to 2021 because it's probably Binance or somebody. Yeah. If you go back, or Coinbase or whatever, if you go back to the Genesis block in 2016, you'll see that the price spiked to something like $3,000 per Zcash on Poloniex or something like that. And that was due to, there wasn't a lot of supply on the market. So if you want to talk about the low circulating supply games that we play today in the shitcoin market. Zcash is one of the first really to go hard at this. And that's because there just wasn't enough coins because of how the mining worked. And so you had this big spike, and then obviously the price collapsed. There were some things that were not optimal about how they were conducting privacy, the trusted setup, the lack of any supply that was using these shielded addresses. So it was basically just another version of Bitcoin with, this possibility of privacy. Fast forward to today. And obviously I wasn't the first one on this. You have people like Naval and others who've been involved in the Zcash ecosystem a lot more intently than me. I'm kind of a later stage kind of guy. I mean, I definitely made some X's on this one, but I definitely wasn't the start of this move. And what is the narrative that they're pushing? Okay, well, if we have AI and if we have all this compute power, we're going to be able to de-anonymize Bitcoin transactions. And even Monero transactions. Japanese authorities have been able to do that, if you believe a particular news article. And what do we have in our stable of shitcoins that's going to be able to give us privacy if we have all this compute power that can essentially figure out who owns what Bitcoin via metadata, via anything that you're putting online, via on-chain transactions? And of course, the authorities will have access to all this information. And so if you care about privacy, then it behooves you to have a certain percentage of your stack in a token like Zcash. And that's the big narrative. And also there's this whole narrative of Bitcoin's been taken over by TradFi. TradFi can't trade privacy coins. I tried to buy some Zcash on the first rip, and like 6 out of 8 of my brokers can support it because they are not allowed to trade privacy coins. And the fact that TradFi is not allowed makes it even more appealing to the grassroots crypto enthusiasts who feel like this whole movement has sort of been co-opted by BlackRocks of the world and XYZ Bank launching some sort of derivative product, DATs, all this sort of stuff. And people feel a bit disillusioned that we're straying away from what we came here for. That's what Zcash represents. And that's why it's up so meaningfully, so quickly. And I think it'll continue going forward. My price target is 10% of the value of Bitcoin is what I'm targeting for my Zcash stack. Does that mean I'm going to sell it? No. Again, as Naval said, it's insurance against Bitcoin. If I believe in Bitcoin, and I do think there are some reasons why you want to have pseudonymous addresses to prove that things happen, especially if you want to have governments start using Bitcoin. I want to prove that they actually paid for things versus cash, where they can, hand the briefcase over to the terrorists and then claim they didn't do anything. Well, I think that we need Zcash, and that's why people are recognizing this. And there's a grassroots who have supported, and we've seen, a massive rise in the price, and I think it's got further to go. So, I mean, Bitcoin dominance is really a function of what's ETH going to do. I am in the Tom Lee camp. I think ETH is, going to continue this rally. You might like the narrative, but he's trying to put this narrative out there that Ethereum is the public blockchain for TradFi that wants to get on chain. I know that there are lots of banks looking at doing stablecoin projects, other DeFi things within their businesses, and now they need to choose a public blockchain. I think that's going to be Ethereum, and Ethereum is going to rip. I've got a $10,000 to $20,000 price target for the end of the cycle. That will take Bitcoin dominance down. And then the DeFi projects that are profitable and are handing out revenue to token holders, like a Uniswap, those are going to see a resurgence.
What's your thesis on Ethereum again?
I think that it's going to be the narrative will be it's the layer 1 blockchain for TradFi. As in, you want to do stable coins on chain, you're going to use Ethereum. You want to do some sort of lending operation or capital markets thing. Now that you believe in DeFi, you're allowed to do it by our board. Whatever your solution is, you're going to use a public blockchain. It's going to be on Ethereum. And that's the best thing about Bitcoin, right? Because if you're trading stocks, you care, right? Because, okay, do I buy some company downstream of whoever's getting the free money, right? Yeah. That's why some of the rare earth companies have done well. Some of the solar companies have done well during the Biden administration, right? Because they were pumping green. So the solar got pumped. Now we're talking about rare earths. So the rare earths companies get pumped, right? If you're in the equity space, you need to understand where the money's coming from, where is it going, make sure you're positioned in the right type of companies. That's difficult. I take the different approach. Okay, I know that money is being created. I know that Bitcoin has been the best performing asset in a fiat debasement race since 2009. Therefore, I don't care where it goes. All I care is that it gets created. I don't have to pick a stock. I just pick one thing, Bitcoin, and I'm going to outperform most stocks. Right? Being a stock picker is very, very difficult.
The entire backdrop of political shifts, liquidity swings, And competing narratives leads to the same conclusion. Bitcoin continues to stand at the center of the macro landscape. Short-term turbulence, whether driven by elections, fiscal standoffs, or sector rotations, merely creates opportunities for those who understand its long-term role in a world defined by persistent money creation. As new spending cycles emerge and liquidity returns to the system, the stage appears set for Bitcoin to reassert its strength moving into 2026, offering a straightforward path to capture the benefits of fiscal expansion without the complexity of picking winners in an increasingly unpredictable economy. Which factor is likely to have the biggest impact on Bitcoin's next major move? Renewed government spending, growing institutional adoption, or shifts in retail investor sentiment? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.